So when you're developing a model, first of all, you're developing a model and you want to backtest the model. You don't need to backtest it technically. I obviously, of course, highly recommend that. But when you're starting a new model, you basically need 3 or 4 parameters to go by that you're going to test. So in our case, we are testing a specific model, which is the Q3 inversion. We're looking for an inverse fair value gap, which is a price element. An inverse fair value gap to happen when? During Q3. So we have a time element on top of that. And then you need some sort of target. And that target for us, or the entry aid for us, would be, the root candles that we're going to be utilizing. Hold on a second. Let me go ahead and edit all of this really quick. So we're going to call this... You guys have any... Oh, I locked it. Do you guys have any name suggestions for this backtest? Just delete all of this. Okay, yeah, we can do... Okay, let's just get straight to the point then, guys. We'll go with, so it is technically Q3. It is going to technically be Q3 still, so we'll go with Q3. We'll go with Q3 root candles. Alright, so the rules here, again, is we're going to be looking for an inverse fair value gap in Q3. We'll even extend it to early Q4. We'll see how that plays out. We'll get more data and we'll be able to refine that. So we're looking for an inverse fair value gap in Q3 to Q4, and we are using root candles to add confluence to the entry or as a target. And this is going to be the 953 and 1034 root candles. Now, do any of you have any suggestions on what the risk management could look like for this model? Oops, typing what I'm saying. 953, 1034 root candles. So I know that I like the stop loss at the swing high or swing low. I don't think there's any benefit to having it tighter than that. And then TP will be, yeah, I agree, at least 30 points. We can even do stop loss at swing high or swing low, but less than 30 points. So it has to be 30 points or less. Anything above 30 points we can opt to not take. And again, as the data develops, we can start to refine this a little bit more. And then we'll do a TP will be at the root candles or TMSO, of course, or LR. And we'll just have to see which one shows up more. Again, collecting more data. At least 1-to-1, I think, is best. At least 1-to-1. So if we're risking 30 points, we should at least be getting 30 points out of it. Okay, so going back to how to backtest and how we're going to run this, how we're developing this model, we're just spitballing here. I literally asked you guys what you guys want to see or what you're thinking. We all brainstormed this together. So you basically we need the price element, which is that inverse fair value gap. The time element is Q3 to Q4. We also have the time element and price elements. These are actually one and the same, of that 953 time-based level occurring. and whatever that time presents in price, that's what we're using as an entry aid or as a target. Okay, yes, we're recording this JJH. So you need a time-based element, you need a price element, and then you need some sort of risk management based around that. Okay, so simply put, the model that we're putting together is we're looking for an inverse fair value gap happening during Q3 or early Q4. This is going to happen during the 90-minute cycles that occur around the 9:53 and 10:34 root candles, obviously. And we're going to be using the root candles to add confluence to the entry, or we're going to be using them as a target. Let me just move this so that's a little bit less confusing. All right, our stop loss is going to be at the swing high or swing low, and it has to be 30 points or less. And then our TP is going to be at one of the root candles, TMSO or LRLR if present. And hopefully we're going to be aiming for at least a 1-to-1 risk to reward ratio. Okay, so again, we have a time-based element, or we have a price element, a time-based element, we have risk management. That's all you need for a very, very simplistic model. Okay, I'm going to delete all of these entries now. Let's see if there's a way. Yes, I can. Hold on. Let me try that again. There we go. Alright, and now, so this is the back. I have a backtesting template that I could share with all of you guys, but this template was based on a previous Q3 inversion that we've tested. So what we will do is just edit this so that it meets the criteria for our testing with this. So now I know I need to add a root candle instead. So in place of session, I'll change this to root candles. And for the options, we'll delete this one. Change this to 9:53. And we will change the next one to 10:34. Okay. This was the quarter in which it happened. I'm going to add another option. I'm going to add Q4. And again, we'll see how things develop. We'll do a preliminary test of 20 reps, right? And that's just to test the base model of what we developed here. After that preliminary test of 20 reps, we'll have an idea of what to refine just within this. So we'll say, okay, we didn't really get a lot of reps with a stop loss less than 30 points. So then we know we can remove this rule of it being 30 points or less. We know that maybe our TP wasn't always 1-to-1, or it was way more than 1-to-1. So then we can remove this foundation, right? And then also we can go in and say, all right, these as targets were or were not working. So it seems like the root candle was always there, TMSO maybe wasn't a good target, and LRLR wasn't always there, right? So then we know, okay, we can change this to TP at just the root candle. And then also, like, we can start to think of other things, like maybe we just TP at 20 points, 30, 50, etc. And again, you would get all of this simply just from your preliminary test. You would kind of see these recurring phenomenons, and then you would say, okay, we can add this, we can take this away, and you'll see as we go through the first 20 reps what this looks like. So a root candle, yeah, you're gonna have to search that on Twitter. Maybe, I'm pretty sure you'll find some information on it, but it's digital time theory. And if you search that, you'll find the actual creators of this theory, and they have content on it that you can study. That book is now free, but you would have to join their Discord to get access to it. All right, entry, exit, duration. Did we pass or fail? Target. All right, so now, okay, we can keep. I think we should definitely keep in our time-based target. So midnight, PM session open, New York open. We can remove original consolidation. We can change this to root candle. PDA is price based. We'll keep this in for now. TMSO, LR, London open. Okay, so that I think will all be the same. We might not even actually use PM open and London open, since where we will be in time should probably not be near them, but we'll see. I'll actually just delete PM open. We probably won't utilize that one. Alright, chart example and tally. Okay, I think we have everything that we need here. Position, long or short, entry. We can add our stop loss actually. We can add our stop loss and our TP. So target, entry, exit. This is all time based. How long? Okay, I'll add it here. No, it has to be. Okay, I have to add a new type of channel. So this is going to be a text channel. No, it's going to be a number channel. So stop loss. We're going to measure this in, what are you guys saying, points or ticks? Points. Okay. Yeah, so this is what I'm thinking here. So when we have the root candle, right, this is going to be the confluence. So this category here is for confluence, and then we have another one for target, in which root candle is an option. So that's how I'm going to quantify it. Yep, exactly. So we'll have it here for confluence, and if there is no confluence, we just won't select anything. We can even add an NA actually. Right, and then well, actually it doesn't technically meet the model if we don't have that root candle. No, because we can use it as the target. Okay, so yeah, so we have the root candles when they're confluence, and we have the root candles in the target area. All right, so stop loss, I'm gonna move near the entry. Where did it go? Chart example. Oh, there we go. Stop loss, I'm moving here. And then I'm going to duplicate this. For TP. Alright, so this will be measured in points. The position is long or short. Maybe I should move it here. And these are all time-based data points here. I can probably delete all of this, but I'll clear it once we start backtesting, just so I don't have to do all of that in front of you guys now. So again, going through the model as is, or how we're going to track it, the ticker will probably all be NQ. But we are looking for an inverse fair value gap during Q3 or Q4. So that is here, what we're choosing the quarter, right? And then we're choosing what root candle is adding confluence to that. Or if it is going to be a target for us, we are selecting that root candle here. Which now makes me think I should add 953 and 1034 separately. And I'll delete root candle. Alright, great. So we have all our time-based levels. And then we're doing a stop loss at the swing higher, swing low around that Q3 inversion. with a stop loss of 30 points or less, and then we are taking profit at a root candle, TMSO, or LR, whichever one is present, and we're targeting at least 1 to 1. So we have all of our parameters here. The only thing we're not measuring technically is RR, but that is being measured through stop loss and TP and points. Maybe during a refinement down the road, we can go ahead and decide to... How did I do that? I don't remember doing this. We can maybe go ahead and decide to add the refinement of actually tracking the RR per trade. All right, so pick a date, any date. Anyone feel free to pick a date, and we can start backtesting from that date forward. And again, what that looks like is we're just going to be backtesting the first 90-minute, the first two 90-minute cycles from the open. Sure, we can do this week. Let me move this. I'll actually just go to one screen. You want to start on Monday? 2 sessions per 5 days. We'll have 10 reps. So yeah, we'll start from Monday. Alright, so we'll just replay to, I don't know what time the first one starts. Well, 9:23 is when Q2 starts. So I think this is, now that we're here, I automatically think this is going to be a little tricky if we have the inversion happening in Q2. So this already tells me that we can eliminate Q2 as a possibility, because if it's happening during Q2, we don't have 9:53 happening yet. Let me hold on. Let me play forward to 10:34 really quick, just to. So there, 9:53 happens early Q3, so we can rule out Q2 as a result. Let me go back. Let me play through 10:34 really quick just to see where that occurs. 10:34 is happening during Q1. All right. So during the first 90 minutes, we will not have Q2 as an option. But during the second 90 minutes, Q2 can definitely be a viable option. So we'll keep Q2 in, but we just have to know that it'll be Q3, Q4 for the first session, and then for the next cycle, it can be Q2, Q3, or early Q4. If you guys, for anyone that's with us today and who doesn't know what these quarters are, this is a 90-minute cycle split into 4 quarters. So each quarter is 22.5 minutes. This indicator is called quarterly cycles, and I do believe that's free, so you can search for that. All right, so let's replay one more time. We'll go to the beginning of Q3 for the first one. All right, so we will not refer to higher time frame PD raise at the moment. Again, this is just for the first preliminary 20 reps, and then we'll go from there to see like what we actually need. I'll also switch this to just a 90-minute stat map, just to kind of have an additional confluence. And again, we can decide if we want to add that later on. So we're in Q3. We're waiting for an inversion to occur now. Alright, so this is the first inversion that occurs. We have a BISI here, or a bullish fair value gap, being closed below, not on. So it's closing completely through it, not on the high or the low of it. Alright, sorry. So once that close occurs, the short would theoretically be on the low. The stop loss would be at that swing high. We do have 9:53 here as well. now on the very next candle, and TMSO is all the way down here. See, this is where I think 90-minute we might want to add the OHLC. This, of course, we're just in the first example, but this might actually be a good reason. So now, again, just with the rule set that we put out for ourselves, I'm also going to pull up the RR really quick. So 1R would at least be there. Let me take off that. We'll do 4. We'll add. Okay, we have 5R there. I think that's fine. We need another one. Alright, so 2 TMSO would be 6R. We'll see what comes up and we'll just test it accordingly. Okay, so we're in, we get stopped out. I'm gonna play through it. We hit the 90-minute stat map distribution level. I'm also just gonna check if there's more context for us here. Okay, so there is an up close candle there inside of a 4-hour fair value gap. That's way far back for us to kind of refer to, but there. So just mechanically, as we approach Q3, this was the very first inversion that occurred. So then maybe here, and then 953 prints after that, right? So then maybe, again, this is just a preliminary rep. Maybe I'm thinking here, for this first session, maybe we can't take a trade until 953 actually prints. But we'll see. Well, we're counting this as a stop loss so far. No inversion there. Move all this to the side. This close is at 644. This high is at 644. So this would not count as an inversion for us based on needing this to close above or below. So we do need that confirmation of a close below, not on it. Alright, still no close, 953 being respected. Alright, that's the closure that we're looking for. Okay, great. Let's see if this one occurs. So I'm just gonna again move this to the side here. And this is just, again, this is just a preliminary rep, and so we're just kind of seeing if our rules are even viable at this point. Alright, so this stop would have been 36 points. Already doesn't meet what we've laid out so far. And then the target would be TMSO. Let's clone that. Stop loss there, entry there. So TMSO would roughly be about 2R. Alright, so there we would actually be wicked into the entry. So it did hit 1R. Here's 1034. Both of them holding. New TMSO and the original TMSO. Okay, so now with this preliminary rep alone, we now have more data to go off of, right? So already I can say that I want to nix the rule of being less than 30 points. So stop loss as swing high or swing low is sufficient. I also think that the entry cannot occur until after 9:53 can print. You guys can let me know if you guys agree with that. Little BPR too. Adonde. Okay, great. So yeah, so then we can't take an entry until the root candles print. In Q3. Okay. Using root candles to add confluence or to the entry or as a target. Yep, stop loss at swing high, TP at root candle, or TMSO or LRLR or 1-to-1. I think all that still holds. We had LRLR down here anyway. This entry would have been null and void because that root candle didn't exist yet. So then we have this first inversion occur. Now, should we have taken profit here at 1-to-1? And also because Q4 would have been ending soon. I don't have it here. So from here, Q4 starts here. So we would have been in that trade for 9 minutes had we TP'd. Q1, or this is the first half of Q4 right here, up until this point, and then literally in that second half it starts to go up. Q1 starts there. So we were halfway through Q4 when that 1-to-1 TP came, or we can continue to hold through the very next cycle. So are we supposing when 9:53 prints that burst of volume that might occur from that could potentially serve as a manipulation for distribution? I think that's just adding too much context to it, Yermaya. I think it's just a simple rule of waiting for an inversion to occur after 9:53, not assuming anything of 9:53 at all. So it could be that 9:53 does already, like, it could be that the inversion prints before 9:53, and then 9:53 actually becomes the target. This is just the first example, right? But from this first example, are we able to refine just the base model as is? So it's no assumption yet. We can create this rule now, and then in the very next rep, that rule becomes null and void again. You see what I'm saying? So that's what I'm talking about with the first preliminary 20 reps. You're just seeing, do these rules make sense in what you're seeing for your first, walkthrough of the model. Would take partial and stop to BE. Would have stopped all the runners. Oh yeah, that's a good point from that 1R. So you could take a partial there, and then move your stop to BE, and then you would stop out here for all your runners. I think moving the stop to BE is 100% a good move anyway after that 1R. So we could definitely try that. I personally what BPR are you referring to? Yeah, I'm not gonna add re-entries to this. I'm just gonna keep this backtest really super at 652. So this right here you're talking about, drawn backward? I would just consider that a fair value gap personally, but I'm assuming you're talking about this. So I'm not gonna get into the semantics of what a BPR is versus what an inversion is. In my book, they're the same exact thing, honestly. There are certain instances where an inverse fair value gap is in fact an inverse fair value gap, but most of the time an inverse is also a BPR. I actually don't have the belief that a BPR is just an up close leg and a down close leg. So is that there? So we're gonna just like loosely use these terms for the sake of getting through the back test, because then we can just spend forever on one rep. So for you though, JJH, if you're trying to track this and you're trying to quantify that, you would simply just add that as another category in your backtest sheet, right? So for your entry, for example, for your entry aid, you would just add like, yeah, you can add, you know, root candles here. You can add like the PD array. So I used to have, I think it was here, I had a category for PD arrays. I'm positive I have it on the backtest template. But you have if you have multiple arrays, or you want to track all the arrays that you're using, or maybe you have, if you have a model and you have specific arrays, you need a checkbox for every single one that's occurring. If you're just tracking all of the arrays, then you can have a category for PD arrays, and you can simply add every single one that was being used for that entry model. So for example, let's say you don't have a model, right? If you don't have a model and you're just trying to figure out what PD arrays you like most, you can have a category like this where you can select multiple PD arrays. And then what ends up happening is when you go back and you look at your data, and you can have like literally a category for PD arrays, you can see, okay, using a breaker, using a fair value gap, using all the different ones, which one has the highest win rate, or which one is occurring most. And then from there you can refine and say, okay, my next backtest I want to only use these PD arrays based on the data from the very first preliminary backtest. Does that make sense? So that's a very simple way that you can quantify that and move forward with backtesting and start to refine the model that you're working with. So now for this model here, going back to this, we'll add the rule of breaking even at 1R. Does everyone agree with that? Alright, cool. Move this up. Okay, and then to track this first rep, our NQ, this is so I think for the hold on, we close here, so the first entry would have been on this 1007 candle. I think there will not be a limit on how long to hold the trade. But I think a rule that could come up is if this Q3 inversion negates this Q3 inversion, that would be a good time to take profit. Because see, we have a new TMSO here as well. So then it's like, okay, do I TP at this TMSO or do I TP at the first TMSO, right? So I think that we can hold until our original target, because again, there's multiple reasons why you could keep holding this trade. You have New York open below us, you have all this LR below us. So then it's just like, okay, at this point then we can hold the first trade until the second trade negates us, or just until TP hits, whichever one comes first. But I do think we're gonna have to start to think of situations like this as well, where like a new TMSO prints. I think as long as that TMSO holds, you can continue to hold for those lower targets. But you know, for now, this is the example that we have. So I'll just take a screenshot of this as is. So the entry here occurred at 10:07. This was Monday of this week. Was there a raid? Do we need this? There was a raid. We took out that high there. Oops. There was LR. Do you guys think we need these two parameters in here for this test? Complete by Q2, sometimes Q1 continues the Q4 run. That could be right. Q2 is there. It would be here then. So then the rule would be closed by the following Q2. Do you guys have... Does anyone agree or not agree with that? Closed by the following Q2. You can definitely add that as a rule. I think even honestly closed by the following Q3, but since the Q2 manipulation is very common, because if you close, like, the Q2 could like essentially run more. Yeah, I got you, Parvez. And then you can almost like capitalize on that profit because it's the manipulation, right? Does anyone have any suggestions in addition to what JJH is saying? Should we close by Q2? Should we close by Q3? Like, should there even be a time stop on the trade in general, in your opinion, based on what you've seen in live trading? I'm open to anything. I'm just literally spitballing with you guys. Okay, so we can remove these. Definitely don't. I agree. I don't think we need these. Root candle here was 953. The quarter was Q3. Position was short. Stop loss was 36. Okay. Sometimes I hold these until a new setup occurs against me. Okay, I think for the most part what we'll do is, since there's no common ground, I think we won't apply a time stop to it. We'll just do it until the price target. I hold long as well personally, so I don't want to be limited by a time stop, and honestly. But I do think, you know, for you guys trading, if you are a scalper, for example, or you don't like to hold your trades long, this is an instance where you could add a time stop to your model, right? But yeah, I think in this case we can just hold for the price target as opposed to adding a time limit to the trade. Because then again, we can hold this until 953 prints against us, and it's like, okay, I was able to hold it this long, and now I can just basically hit reverse and enter in the opposite direction. You know what I mean? So I think adding that level or leaving that open for interpretation adds fluidity to the ability to, you know, read price and take this trade as is. Okay, so the stop loss ended up being 36 points. Again, I'm open to whatever else you guys want. We're just all spitballing here. I'm glad that you guys are all participating today, or at least my regulars are. We got in at 10:07. And let me remove that and add AM. Okay, got in at 10:07 AM. We exited the trade at 10:59. So that's a nice hours-long trade, which I think is a great hold. 10:59 AM. So I'm gonna do duration plus 1 minute, so 53. And this was a... I don't think we need these either. We don't need admin or pass technically. Ooh, but we do need a valid or invalid. So we'll keep that as is. We'll consider this a pass because that met the parameters. And this is a chart example. Any notes here? Okay, we'll actually add that. 1R. What's the significance of 1020, Cryptic? I think actually we can do 1R was hit before 1034. Maya is a Fed in notes. Probably have stopped BE and profit. Oh yeah, you're right. So technically we would have taken partial here at 1R, and then because we moved our stop to BE, we wouldn't have gotten there. So technically we would have gotten the trade, we would have gotten out of the trade at 1019. Or, sorry. Yeah, 1R, so 1017. Is that what you're saying, JJH? BE and profit, yeah. You're completely right. So I can move this forward actually. Oh, I see. Instead of admin or pass, you'd have stopped BE or profit. Yeah, we can do that. But see, then it's like, so okay, hold on a second. We have to work this out. So you have to take the trade with enough contracts then that you could take partial here, right? So the assumption is that you're going to take a partial. The assumption is not that you're getting in with one contract. So it's either you're going to take a partial or you're going to just take a full profit there, right? So then we have to have a parameter to say, okay, our runners were stopped BE, not that the full trade was stopped BE. Yeah, so then, okay. So I'm gonna just add what I do here. So for me, I actually don't move my stop to BE until I hit 1.5R. That's why I had that parameter in there when I first pulled up this RR tool, is because I personally don't move my stop to BE until we hit 1.5R. That's just how I trade for everything, and it's because I've tested my model in this form, in which I know that once we get past 1.5R, it's likely not coming back to BE. Just for my testing for my model, right? I don't know that that applies to this model. But if we do BE here at 1, then we would actually have a parameter in our backtesting sheet that says it would basically be a tally for BE. So it would kind of be similar to this, for example. I can just make it. But we can do BE after, right? And then the parameters would be 1R. Oops, what did I do? 1R, 2R. That's fine. And then, 3R, etc. So then like, okay, your runners were stopped after that. So then we'll do after duration. Let's see. And the target here was TMSO, not 1034. And then, okay, so then pass. So the whole trade would have been, no, we would have hit profit first. So then this can be for runners. Oops, let me actually make my life easier. I'll delete this property and I'll duplicate this. Alright, so this will be for the whole trade, just BE. And then we'll do runners BE. Okay, so this is good. We passed it. But the runners were BE after 1R. And then I added a note here that 1R was hit before 1034. Alright, is everyone satisfied with how this is going so far in just the first rep? So what we've established so far is that we're going to track what R was tagged before the runners were stopped out. This was our target. If the entire trade was stopped out, or if the entire trade went to BE, which actually wouldn't be a situation. Let me think about that. So if we went to 1R, we would only trail to BE after 1R. So the whole trade technically can never go BE. So then that would be admin or fail. So this would be admin, going back to that, which we already have. So I can remove this. Okay. So then if the entire trade gets stopped out before that 1R, right, then we would admin, so we'd fail that, right? And then once we get to 1R, it's a given that we would beat BE. Oh, now I see what you're saying, JJH. Now I'm with you. Okay. So then if we move to BE, no, because if we move to BE, we would already have taken partials, so that's technically the profit. So then the runners would be stopped out after 1R, so that would be assumed profit. So we actually don't need this parameter neither. We don't need that BE parameter. In this instance, though, the stop loss would have been 36 points, so we technically didn't get to 1R. We did. So that's what this actually is. So from our stop loss of being our for 1R, right, 1 risk, is from this entry all the way to our stop loss. So 1R of that is here. So we did get to there, yeah. Alright, so, okay. Now let me go back and retrack the data, because I did track this incorrectly then. So we technically got out here. We got stop BE there. Or I'll pull it to where we got stop BE. Alright, and we got out at 10:17. Okay. So 10:17 a.m. And again, we could be going through all of this on 1 rep and then being like, okay, this doesn't work on the next rep. And then we can decide at that point, do we continue to change it, or do we continue with the rest of the 20 reps to see if it works out or not? So 10:17, it only lasted, I'm doing duration plus 1 minute. So 11 minutes, we did take profit off the table, and then our runners were stopped out at after 1R. And it's always after, it's assumed after. Our target was TMSO. I need to save a new chart now. Oops. Let me close this. There we go. Okay. Didn't copy the link. There we go. Alright. Here we are. So now we can move on to the next rep and see if it works out. Admin to stopped or similar. Yeah, okay, we can do that. We'll just do a full stop. Alright. Alright, we will move on to the next rep now. I think we're good to go here on this one. So now our inversion can occur during Q2 as far as we know for this second cycle so far. We don't have any bearish fair value gaps here yet until this one. So this is the first one that we can invert or inverse? Or if you guys have any qualms with that, do you think that we should wait until Q3 for the inversion, or should we allow for the inversion to happen during Q2? I'll ask you guys now. We have 11:10 printing. So yeah, we're tracking both. So the model is that we need we need the inversion to occur, but we're allowing for the inversion to occur either during Q3 or early Q4. I'm actually allowing for it to happen preliminarily. I'm allowing it to happen as early as Q2, just because I've seen them happen during Q2, obviously, right? And if that Q3 inversion is happening, or if that inversion is happening in general, then it becomes, was there a root candle to add confluence to that inversion, or was the root candle in fact our target instead? You guys don't pay attention to me when I'm talking, huh? Just kidding. But yeah, that's how we're tracking it. So I'm asking you guys though, do we limit it to only happening during Q3? I do think we should allow it for early Q4 as well, like the first half of Q4. Again, because I've seen it happen there, but we can wholeheartedly eliminate it happening in Q2. Okay, I need a little bit more context from... Okay, so Parvez says Q3 only. Ali says, when you say both, do you mean... Okay, Q2 and Q3. And JJH, what do you mean? Cryptic also says Q2. Okay, so we'll do we'll allow for Q2. We can even do like late Q2, right? So we can say the last 11 minutes of Q2 to the first 11 minutes of Q4. Since every quarter is 22.5 minutes, it has to occur. Okay, great. So it has to be late Q2 to early Q4, right? And this is going to be defined as last 11 minutes to first 11 minutes. Alright, is everyone in agreement with this rule? Does anyone have any qualms with this as we move forward? Okay, cool. So see here, like we are probably already know 11 minutes has passed, but we're already in late Q2, or yeah, as is. So once we got to this point halfway, we can now seek an inversion, and by that time 11:10 has printed, so that actually works out in my opinion. Okay, so 11:10 is here. Let's see if we get that inversion. So that inversion does occur, but do we get an entry now? So this would be the long. It would be from that high to this swing low. That'd be a 41 point stop, and the root candle is there, so it should hold price up if anything. TMSO is here, so that would be too close. So again, using our RR tool, 1R would at least be here. At least there. And then we have 1034 above us that we could target. So let's see if we even get an entry with this. Okay, there, we're in the trade now. So the entry occurs at 11:16. All right, and we get stopped out on this one. So this one I think is a valid trade. We do have that rejection of TMSO here. So now this is a rule that I added to the original Q3 inversion backtesting. So this is what I notice all the time, is that when we do have an inversion and we take the trade, see, we're now in Q3, and this is after that inversion was confirmed. We get that entry inside of Q3, right? When TMSO is before our target, I added that as a rule to not take the trade. And I'll show you guys that here just so that you guys can all track what I'm saying. For the V3 version, it was also V2. That was actually the very first refinement that I made. But one of the rules is that no trade can occur if TMSO is closer than target unless both the raid and the inversion occur during Q3. So just using that rule alone, we can decide not to take this trade because TMSO is before our target. So do we keep that as a rule? Do we add this TMSO rule to our current testing now? Okay. Thank you guys for everyone that is participating. We'll go ahead and add this. Oh, it's a different font. That's gonna, I'm gonna just take, alright, I'm gonna keep, no, we'll close that. Okay, so that was just a stop out, so we'll track this as well. So this was also Monday. There was no root candle here. Oh, do you guys want to add 1110? It wasn't technically a confluence, it was underneath of it, but it did hold. So it wasn't confluence with that inversion specifically. But it did technically hold as support here. So we could add that 1110. Nice. So you took the inversion above 1121, or where's 1121? Here. Okay, that's great. Okay, so I think in this situation here, when we use 953, it was because we were above it and that inversion occurred around 953. So I do think this qualifies as using this as a confluence here in this instance because that inversion occurred above it. So I'm going to add 1110, and what I will do in this case is just kind of gray it out so that it's not an exact root, it's not the root candle that we're using to frame our narrative, but it was just there in the vicinity. Alright, so this did occur during Q3. Well, it was confirmed. No, I'm gonna do that as a Q2 because it was confirmed during Q2. This was for a long. The stop loss would have been 41 points. Nice. 1113. Yeah. So that was 1113 there, and 1121 was this candle right here. So that inversion was like literally on the root candle, and then you inverse the inversion, right? Like you basically reclaimed the original inversion here, but you inverse this candle that confirmed this original inversion. So that's actually a really good trade, JJH. All right, so then we got stopped out of this trade at 11:30. TP would have been 68 points. What happened? Oh, I have sorting on. Sorry, entry was here 11:16 to 11:30. This was a full stop, no runners. Target was going to be 10:34. And the chart example. Oh wait, hold on a second. I didn't actually have to track this trade because it would have been null and void according to TMSO. I'm gonna delete this entry. I just wanted you guys to know why I didn't have to track it. But now since we've added that TMSO rule, we wouldn't have attempted to even take that trade. So this wouldn't be tracked as a part of data because it wasn't a valid entry. Does that make sense to everyone? In this instance, the Q3 inversion short would have been taken. Yes, yes, agreed. Okay, so then, alright, so now since that wasn't a trade, this is the Q3 inverse right there on the 1021 candle, which is also a root candle. For some reason this indicator just doesn't show it. Okay, so if that wasn't the valid trade, and that was in fact the inversion that occurred during Q3, our target from there for a short swing high here, our target from there, the very next one that's available to us is actually New York Open here. We also have the 658 root candle, and then I can just pull up the RR. Alright, let's see if this one plays out. We already took out a low there. We already would have hit 1R, so we would be BE at that point. This is actually good because then Q3 doesn't need to be a reversal. It can simply just be the inversion that's happening during Q3. But see, now at this point, if we do take this, okay, so we know not to take this one, right? Because TMSO is right here, so we don't take that trade. Okay, never mind. We have a rule in place to eliminate this from our charts. We're gonna have to see how future ones play out, because if we're allowing ourselves to take trades as early as late Q2, then any inversion that occurs here is valid, and we need another parameter to invalidate that idea. You see what I'm saying? So in this case, in this specific case, the only invalidation that we have for that is that TMSO is right here, so it's not a good trade to take. But overall, this is panning out to be good just because it doesn't require Q3 to be a reversal trade. It can also be a continuation of this move, obviously. Alright, so let's see if it reaches TMSO, or if this root candle would have been better here. Or sorry, not TMSO, New York Open. BE. Okay, great. So trying to figure out how I'm gonna track this now. Let me zoom in. Q1 here. Alright, so this is NQ 14th, Monday, The root candle here was actually 11.21. Now, do we take the trade if it was 11.21? For that second 90-minute cycle, it's almost impossible to not include that because 11.10 occurs late Q2 and 11.21 is actually the root candle that occurs during Q3. Yeah, I mean, I wouldn't necessarily look at this as LR. And we don't have a swing low as the rule for TP. So do you want to add swing low as the rule for TP? Okay, yeah, so we have to add. So then we have to use all 4 root candles happening in that time frame. So it's actually after those print, but we can use all 4. After 10:34 was printed there during Q1. Okay, yeah, so it's by default. Alright, so 11.21 root candle. This was during Q3. This was a short. Stop loss was 13.25. TP would have been here. So I think okay. Right, so this is the part of just model development, JJH. It's not that. So again, because this is the preliminary first 20 reps, you're just deciding, do these rules make sense? Because again, you can make a model out of thin air, right? We literally just spitballed this model and said, okay, it can be this and this. Then as you go through those first 20 reps, you then decide, does this make sense? Once these make sense enough times, then you start backtesting only according to that parameter, to the parameters that you've set out. And then from there you say, okay, like this is doable. So to me, in my opinion, a swing low is not something that's quantifiable. I think it's best to stick to time-based levels because time-based levels are constant as far as TP. We did leave PD array, and the swing low is a PD array, right? So we do have PD array in there, but I think it's too, and that is, you know, for the record, this is an obvious low. So this is like the most obvious low within this range, right? But I think that a swing low, like if anyone is being nitpicky, they can say, well, all of these are swing lows, and that they're right. All of these are swing lows. Now this swing low is significant specifically to me as an ICT trader because it took out New York AM session high. So I would know that this low is more significant to me than these swing lows. You see what I'm saying? But to any trader out there, this swing low is just like every other swing low, in my opinion. So I think the best target in this instance would have either been that New York Open time frame, or it can simply be this root candle right there. Right? Or then again, we can get into, okay, we're not really hitting these targets, and this would be a refinement down the road. But these things that we're doing, they're all just refinements to say, okay, this is what makes the model better. This is what makes it more realistic. Or this is what just, you know, earns more money down the road. So I think in this instance, the better target would have been the root candle, but still we would have hit BE after tagging 3R here, right? And so we know then we at least took profits off the table once we got to this point. Our runners were BE after 3R. So then I'll move this here. The TP would have been 62.25. And oh wait, I just noticed something. We didn't even have an entry here. We had no retap of this inversion. Right there. So we closed it and never came back to it. So this also was not a this also was not an entry, and we wouldn't have one here neither. Let's see. Q4, 11 minutes is there. So the first inversion actually occurs here, and we also get no retest of it. So there's just no entry here in general in this entire thing. So I can also delete that rep. Alright, so we move on to the next day. I'm gonna check to see. Are you guys all following me there? Yeah, I think so. That becomes too ambiguous, JJH, if we take it at that retest. You're saying unless you take the one at 11:13 and enter at 11:35 there. So we close here. No, I don't think we get a close below there. There's no close below. So the low of this fair value gap is 564. The close of that candle is 564 and a quarter. So that's also not a valid entry. Why do you need a retap in order to enter? Sometimes I take it without the retap. Well, yeah, because if you don't take it, you just need some sort of yes or no phase, yes or no type of. It's because when you're backtesting a model, it has to be mechanical. If it's too discretionary, your data is not true. So that's the only way. I'm just going off of the first test that we did on the Q3. If there was no retest of it, you're basically more or less chasing it, right? So the rule can be, as long as we close above or below, or even on, right? But again, on the first test that I did, in the very first Q3 inversion test, I did it with the retest. If there was no retest, I didn't take it. So that's just literally how I'm quantifying that and making it mechanical. You don't need to. If you do it in person, I'm not saying you're wrong. I'm just saying that this is what we're testing. So for this right here, I'm gonna leave it with the retest, because I think that saying that you don't need the retest would mean that you would literally just enter on the open of the next candle, and I don't think most people are trading like that personally. So leaving it mechanically, I'm gonna demand that retest happens, and if that retap is not there, there's no entry. And again, we're all doing this as a group backtest, so if you guys decide otherwise, we can change that rule. But I don't think that I don't think most people, if it's just closing it, they're just chasing it. Or at least not any mechanical based traders. Yeah, exactly. Because you're only gonna assume that you got in on the open, and I highly doubt everyone is pressing sell on the very open of that candle. But that retest is saying, okay, like, because you really want to test something that you can duplicate over and over and over again, right? So if we're getting that retest, and we can say, okay, we're entering at that low, and you have a limit order placed there, which I've done with you guys live. I literally call out, okay, I'm placing a limit order at TMSO, or I'm placing a limit order at the low of this fair value gap, or the CE of this fair value gap, and that's how you guys are all getting the same entries as me, because I can quantify and I can mechanically say I'm placing it here through a limit order, not marketing in. You could, but you could, but again, this is just the mechanical approach to it, Ali. What you're doing, this is not to say that what you guys are doing live or not, or whatever way you're already trading. I'm not arguing with how you guys are trading. You can definitely do it, right? But see here, we don't get the close below until this candle. Once you get the close below, there is then no retest of it until this candle right here, right? So this is technically the first entry for if we were to take this one. But what happens here is if we take this entry right there, right? Then we have to say, okay, this becomes a little bit discretionary because now we didn't get a retap of this inverse. So then do we just follow price action down until we get a tap of another inverse? Okay, we inverse this one. Now we close below it here. No retap. Okay, we'll wait for entry there, but now do we get another inversion that's occurring in the meantime? So do you see how things become very discretionary and models become less mechanical when you start to form fit what's happening in price action? Right. For testing, for any model, I think there needs to be defined rules for entries in general, and that's I think in my opinion, in true mechanical trading, right, or even being able to read price discretionary, if you initially move away from discretionarily reading price and you approach things mechanically, you then actually start to develop a real model that you can duplicate over and over and over again. And the sooner that you move away from discretionary and you apply mechanical approaches only, the sooner you can actually start to read price discretionarily, ironically, right? And that's because, again, like you have so much chart time of reading the price action a certain way. So for me, like for a market structure shift or a change in state of delivery, I'm not looking for a close below candle opens. I'm looking for a close below the low. So to me, nothing is happening important here until we get this candle closure below that candle anyway, right? And as a result of that, I'm not waiting for a fair value gap entry until we get that close below. And so then I can say, so then at that point, you've seen it happen so many times, you can now read price discretionarily as a result. Does that make sense to everyone? This is off topic of the model now. I'm just saying that if you continue to bounce around and you say, okay, well, sometimes I do this, half the time I do that, a quarter of the time I do this, well, in this situation, I had this, this, and this, that's fine and dandy. And if you're getting paid, good for you. But I can wholeheartedly say it's going to be a lot harder for you to quantify anything or for you to ever say that your trading is data-based or that you have statistics on your model, because you don't. You basically only have statistics on your discretionary trading. You don't have a set model or anything like that. Yeah, right, exactly. Like you for what you only, because again, every single, like, let's just think of this as like literally 5th grade science. If you have no theory that you're going off of, that you're trying to prove or disprove, then you technically have no conclusion that you can come to, because you did not have any standards, you did not have any variables, you did not have any true test that can say, okay, this was the control for this and these were the variables that we were testing against that control, right? So you have to know. Right, exactly. See, like, so then it's like, okay, you're trying to front run the inversion, but what about the price action printing in real time is telling you that you can front run that inversion? Right? It's like, oh, it's because it's hitting a certain objective or PD array and it's only during Q3. And then it's like, okay, well then, what time frame PD array was that from off? Like, exactly. So that's how you become more mechanical in how you're approaching things, or just that's how you start to be able to like read things discretionary, is because, like, all right, well, I know that from my testing from just doing things mechanically, I know that 5-minute arrays aren't holding like 15-minute arrays, etc., etc. Yeah, and honestly, guys, like if you have actual data behind your models, you also know wholeheartedly how much you can risk per model. It's not that, okay, I'm gonna go in today with one contract because I'm feeling risky. I'm gonna go in with 5 minis today because I'm going broke. Or I'm gonna go in with one micro today because there's no news. It's none of that. It's I have a win rate of this model tested at 75%. So I know that if I risk $500 for 10 trades in a row, it's going to project this much money wholeheartedly, cold hard math, because 75% of the time it wins. Or I know that if I lost 3 trades in a row, I'm not going to lose my account because this model has proven at 75%, blah, blah, blah. You know, like, and I know that risking $500 per trade is not going to blow my account, period, or I'm not going to like put the house on the line as a result. So it literally helps you. Hey Jaws, how's it going? Like it literally helps you know how much money you can even project, how much money you should be making each month, each week, based on having statistical data behind what you're trading. You know what I mean? So all right, now that we know why we're being so rigid, I'm not saying that any of these things are right or wrong, right? I'm just saying that this is how we can say mechanically this is to take the trade or this is to not take the trade. All right, so now we will go forward to tomorrow's price action. Actually, we're going to take a break here really quick. I'm going to go grab a drink. Feel free to drop any comments or suggestions in the meantime. I'll move forward to tomorrow's price action. And then I'm gonna go grab a drink and I'll be right back. 5, 6, 7, 8. Yeah, everyone share your hope and pray models. That's hilarious. Alright guys, I'm back. Okay, let me tell you a quick story really quick that I just thought of when I was getting my drink. Two quick stories that are kind of separate but the same concept. So before trading, once upon a time in my dog years of working, I used to work at Trader Joe's. Okay, when I was working at Trader Joe's, I used to order their cheese for them. So like the entire cheese section of the store, I managed that entire section, and I had to, figure out how much cheese to order every single time they deliver the truck, right? So based on how much cheese we were selling, what holidays were coming up, and what the sales volume was at the time, and knowing that we only had 2 deliveries per week, so we had a delivery on Tuesday and we had a delivery on Saturday, and I had to know what cheeses were going to last me from Tuesday through Saturday, and then at Saturday how much cheese I needed to last me from Saturday through Tuesday. So obviously weekend sales vary very differently from Tuesday sales or weekday sales, right? They obviously differ as well from season to season. Sharp cheddars tend to sell a lot during the fall and winter. Mozzarella sells a lot during the summer, things like that. Okay, so based on literally looking at my order sheet and looking at previous year's order sheets, this type of data of knowing how many bricks of cheese I was selling per week was how I was able to basically keep the rotation of the food fresh, so that I never had cheese that was going bad. I also never had cheese that was like being returned as a result of it tasting old per se, right? So this is one example of like knowing the data of what I was selling or what I'm doing, buying and selling essentially. Knowing the data behind that was like, this basically rocketed the profits of the cheese section in my store that year, because I was able to keep the rotation up to demand, right? So this is literally what we do in trading. Now then move forward to literally just a few years ago, also before I started trading, I was running a restaurant. In the middle of the pandemic, and in this time frame, I was trying to figure out how can I keep the restaurant, use the profits from the restaurant to not only pay my salary, but pay an entire staff to run the restaurant without me being there. So I had to look into the data behind how many orders we were getting every single hour, and how much we were making at each of those hours, basically as a result of those orders, and how much that profit could support as far as a staff. So at this point, because I have all that data at my hands and I could track all of it, obviously, I could decipher, okay, from open 11 a.m. up until 5 p.m., I could essentially just run a ghost kitchen in which we only do deliveries. People can no longer pick up, right? I can have a staff of 2 people, one taking orders and packing orders, one strictly on the grill, right? So because I can run a 2-person staff, I'm only paying a 2-person salary during those hours. I'm making X amount of profit. Then for dinner rush from 5 to 11 or 5 to 10, I think we close at actually 9, but 5 to 10, and to be able to close the store and make it out of the store within an hour, then I can have 6 people on staff because we're projecting this much money. And as a result of having 2 people during lunch, 6 people during dinner, I can maximize profits, and all the while I do not have to be a body inside of the store helping any of them. So I'm literally, it's all profit from that point. So these are 2 examples of how data will essentially help you minimize your losses and maximize your wins. Generally, every single trader goes through about 3 or 4 stages. One in which they are simply losing too much, right? 2, they are no longer losing, but they are breaking even. Then in the 3rd stage, they are breaking even. They are starting to make a little bit of profit, but again, just very little, right? And then in the fourth stage, this is when they're truly maximizing profits. Okay, so first you're losing, then you're BE, then you're making a little, nothing crazy, and then you're maximizing profits full on. So what those stages consist of is, first you need to figure out a model, right? In stage 1, you need to figure out a model, any model. Then in stage 2, when you're breaking even, you need to figure out when to take a trade and when not to take a trade. Then when you start making money, you need to figure out when to take partials and when to break even. Then when you start maximizing money, you're combining all the 4 stages before that. You have a model, you know when and when not to take it, you know when to break even, and you know exactly how much to risk to maximize the profits within that model. And all of this is to say, this is why you need a mechanical model, a base model, to backtest and have data on. Okay. All right. Did anyone? No one shared their. Thank you. No one shared their hope and pray models with Cryptic. So what I tend to do for my hope and pray model is actually I just kind of go off of my daily bias for that day. And if we have a market structure shift that has occurred within, I don't know, a market structure shift that has occurred within the last hour, let's say, I will literally take any fair value gap that is in agreement with my daily model. And this actually works out more times than not. But that's basically my hope and pray model. I don't take soups at all. But yeah, that's pretty much as bad as it gets. It's just like, I'm gonna take any fair value gap that's in line with my daily bias for me. Okay, hold on, I got a tag here. Steven is funny. Preferably, but no. So no, it doesn't. I actually like to trade that specifically during pre-market a lot. So during 5 to 6:30, around this area from London close to around 6:37. If I'm bullish on the day, for example, and we had a market structure shift here and a fair value gap, literally anytime after that, I'll go ahead and take it and hope that whatever low of the day that happened down here, which is usually a London low, hoping that London low basically holds. And if I'm sized right, especially if I'm trying to take a daily range, if I'm sized right, I can withstand any pullbacks within that, right? So that's basically the gist of my hope and pray model. All right, so we're into Tuesday now. We'll move forward. We have to wait for 953 to print first. All right, we have 953 here. We are now in Q3. TMSO is here. True week open. There was really nothing here except for this right there. And we just closed it and never retapped. Excuse me. Alright, we didn't tap it there. So, okay, the way I'm looking at this right now is we have that inversion, right? We confirmed the inversion during Q3. It is also literally aligned with the 953 candle, and we have no inversions that are occurring on the way to retesting this. So if this fair value gap can stay open on the very next candle, if we retap this, then this to me is a valid entry to go long. And the target to me would just be TMSO there. But I don't think this would meet the 1-to-1 criteria. So if this is our long, Our stop loss would be there, 26 points, not bad. TMSO would be there. Do we have anything else that we can aim for? The high is 1-to-1 basically. We can aim for literally just 1-to-1. Yep, at least 1-to-1. And it's just above the swing high. And we do have highs above that as well. So I quite remember Tuesday, so I already know, or at least I think. I don't think this is gonna hit TP, but we can just aim for 1-to-1 in this instance. So I'm gonna wait to see how the next candle prints. Again, if we have an inversion here, this would technically invalidate this entry, because then the most closest or the most recent inversion is this one here. So what I want to see on the next candle is that we tap this and close above this fair value gap. Now, of course, in real time, that would be hard to decipher, right? But basically, the idea is in real time, when this 1 minute candle is printing, you would want this to be tapped before the candle closes. And it never gets tapped. Oh, very interesting. Okay. I'm gonna let this next candle play out. Okay, so like that. That's not what we want to see. So see, it gets tapped. It opens up here. It taps in here, but now it closes this one. So this would not be a valid trade for me. I would then be looking for this inversion here. Exactly. So now we inverse that candle. But we're above 953 here. Alright, so now in this case though, because we have this is the most recent inversion. I will say this isn't the most convincing because it took so many candles to inverse it. But because this is the most recent inversion, this is the inversion I would want to take in this case. Short. Stop loss. 958 isn't 1-to-1. New York Open is at least 1-to-1. Well, I'm there. Hold on, guys. 1 second. Alright, let me just make sure I have this entry on the right. 63.75. 63.75. Okay. Let's see if we get the retest. We also have another root candle down here. Let me pull up the RR as well. Alright, we get the retest there. We're in the trade. We close below 953. Back up. We haven't hit 1R yet. We have another inversion. It's very tiny. It's probably only 1 tick. Yeah, I fumbled this live. I took a short here, I think. somewhere in here. When the short failed, because my stop loss stupidly was at TMSO, this should have been my entry. Let me share a tip with you guys in general. And again, you know, take this with a grain of salt. You guys obviously have seen me trade live. But when you are trying to take an entry and the stop loss is too wide, what you should be thinking of is a way to bring your entry closer to your stop loss instead of a way to bring your stop loss closer to your entry. So in this scenario, this is exactly what I did. I took the entry around here because I took this inversion, I believe. I took this entry around here and I said to myself, yeah, yep. I said to myself, oh, this stop is too wide for me. I don't know why. I wanted to place it here at this swing high, and instead I placed it at TMSO, like an idiot. And I got stopped out to the tick. And what I should have done in this entry, literally, I should have decided to move my entry to TMSO so that my stop loss could be this swing high. But yes, this was a very messy morning, and I remember just thinking, wow. And because I got stopped out here, I was like, all right, well, let me just try a long. Since I'm so anti-long, let me just try a long and see if that long works out. I got stopped out again, and then it ran so many points. Oh, okay, never mind. It ran here, apparently. All right, well, there's RTP. So in this instance, it did work. Let me track all of this. I remember, this is already just pain. Yeah. Yep, JD stayed short. What a day. What a day. And that stop loss wasn't even that wide. I think the first entry when I took it, my stop was only like 18 points. I was like, why the hell did I do that? What in the world would make me do that? Like, I always use the swing high. Why all of a sudden am I using my entry? This is like TMSO is pretty much always my entry. Why did I do that? That was so insane. Yup, exactly. And I was just like, all right, I'm pretty much done for the day. This is it. Alright, the root candle here was 953. This was in fact during Q3. This was a short. Stop loss would have been 23.25. Oops. 32 points. Entry was at 10 a.m. Exit was at 10:11. What did I say? I said 10:11. So again, duration +1. Runners were not stopped. Our target was New York Open. And there's our chart. Any notes on this? The inversion was above Q3. I mean, it was above 953. Okay. Good, Cryptic. I mean, I feel sad when my entry... The worst to me is when my entry and my idea is correct, but for some odd reason, my stop loss was too tight. And when I say some odd reason, I mean when logically my stop loss could have been either one of these swing highs, and I decided to place it on what's normally my entry. TMSO is 100% normally my entry. It's not normally my stop loss. So when I stop out for no good reason, that is the absolute worst. And I've been doing this a lot lately. The first 3 weeks of September were basically BE from premature stops. The first week of October was BE for premature stops, and then last week I brought myself red from just dumb trades, from being aggressive on stream. So the only time I get upset is when I stop out for dumb reasons from a stop that's too tight. Again, because usually the swing high is plenty. Alright, so now we move forward into the very next one. We'll wait till 1034 prints. I did take this trade down here too. So here's 1034. We are only in Q1, I believe. Although I don't even see where Q1 is. Yeah. Oh, it ran. There it is. There's Q1. Here's Q2. Alright. Let's see. Let's just do quick math. 11:53, so we can't take a trade until like 11:04. Just double check. Alright, there's 11 minutes there. Yep, 11:04. So we can take a trade after this. This is another instance. I took this trade also on stream. I took this inversion here, right? And I placed my stop loss at weekly open. I said in real time to you guys, put your stop loss here at this swing high, because my stop loss here is probably too tight. As soon as I said that, I got stopped out. And I already know this at least ran to like, I think it at least took the swing low. I was like, damn it. Chasing, I made a rule of letting it go. Like Elsa. Oh my gosh, yeah. And I got off right after this. I was like, alright, I'm not gonna do this anymore. Yep, it was a 6-point stop, and it was because I had stopped out twice up here. So I took like an 18-point stop, and then I took like another like 20-point stop on this long, trying to long it. And then down here, I only had like X amount of points left for my $1,000 max loss limit on that specific account. It wasn't like a Top Step account. It was just my loss for that equity. So I didn't want to lose more than 1,000. So I was like, all right, I'm just gonna place my stop loss here at this weekly open. And I literally said, you guys should put your stop loss here. And then as soon as I said that, boom, I was like, damn it. Alright, so we're waiting for an inversion to happen now. We do have this inversion here already. Oh no, we don't have it actually. We never closed above it. Okay, so this is still a fair value gap. So we're just waiting for an inversion to occur now. Is there a sensible way to track how far runners would have gone? Yeah, you just, again, it's just another column. Right, so you would, let me see if I have a better example. Oops. So on my 940 backtest, this is the backtest that deemed me backtest just. So on this backtest, what I tested was a max win. And of course I tracked this in dollars, but I would track this in points. So what I'm actually, for this model to be successful, I was only taking this trade for a 1R trade. But beyond that 1 hour trade, I wanted to know how far it would have gone beyond that 1 hour trade. So you basically just track a max win. Another way you can do this is like making a checkbox for R's, right? 1R, 2R, 3R, 4R, blah, blah, blah. And then you would check what R it came to. Or just like the way I suggested in the other one is that, like here, you can make this a maxed profit and you can track how many R was tagged before, you know, I don't know, whatever. Before your stop loss, before trailing, anything, or by a certain time frame. But you can just track it this way so that you know this entry hit, you know, XR so many times, right? Then you can say, okay, for this model, I'm gonna always target 3R. I'm always gonna target 5R because 80% of the time it does that. And there's ways to organize your data. Like once you get into, you can make different views of your data, but you can literally organize it by R, and you can figure out, okay, this many trades hit 5R, this many trades hit 9R, blah blah blah. And then but that's how it's literally just another column. Just always keep in mind when you're backtesting, the more criteria that you add to track it, the more painful a backtest is going to be. The more painful a backtest is, the less likely you are to backtest it. So that's why I like to keep, that's why like I'm spitballing the models with you guys. That's why I keep the backtesting like very, very simple, and we're not trying to add too many conditions to it, because then it gets hard for you guys to follow, for one, when you're watching me do this. And then two, it also makes it unappealing for me to backtest, which is why like I stopped backtesting the V3, right? It's just boring now. So yeah. Okay, we got this tracked, right? We're on this rep now. Do I know of any framework programming language tool that can make the rigor of doing this quicker? Do you mean for tracking the data specifically, Jeremiah? No, why don't you make one? No, I do not. And I think a lot of people are trying to create that one, yeah, no, I definitely agree with you, because the ideal, the most ideal indicator to me, or the most ideal journaling software to me, would be something that I can add to my chart. It'll track all of my data, like from the live trades that I'm taking, and then spit all that out into whatever else that creates data and can then tell me what my actual model is, right? And the closest thing to that is TradeZilla, but TradeZilla technically takes all that data from like a CSV, right? It takes it all from a spreadsheet essentially. And I do know someone that has a portfolio tracker. They did create an indicator in which you can take trades. It'll track all your trades and all your different accounts, and it'll tell you where you are P&L wise on all your accounts. But it doesn't tell you like, okay, we had a stop run, we had a fair value gap, we had whatever, it was at this time, it took this R by that time. There's nothing like that, and I think really because there's too many concepts to consider. But I do think that, you know, something like that would would unanimously, it would change the industry all the way across for whatever discipline anyone is taking account, putting into play. But I do think, like, if you could essentially do something to where you could apply it as an indicator, it could read all their other indicators, and then spit out like what model, what's happening, yes or no for these conditions, and then all of that. I think that is, yeah. I'm gonna let you guys all talk that out. I'd be very interested in creating something like that for all concepts, but I'm not at all a programmer or a coder. I did help, so I've obviously helped with automations. I don't know if you guys know where I came from before I joined Kingline, but I was a part of 2 automation groups before Kingline. One automation group I'm still a part of, but it's not at all conflict of interest with what I do with Kingline. So I was able to stay a part of that group. The other group that I was with, we literally automated ICT logic, right? And in that process, I had to translate what I understand in ICT essentially into basic English, right? And from that plain English, my friend who was communicating with programmers and software engineers and developers had to then translate what I was saying into something that they could understand in code, right? So we did come up with a lot of ways, like I had to come up with a way to quantify how you would use a fair value gap, or what swing highs and swing lows you would basically deem as important, right? And then how you can overlay these things across multiple time frames, and that's what would make a higher time frame fair value gap more probable than another time frame fair value gap, for example. And so I can say that process alone was very strenuous and I'm no longer interested in stuff like that as a result of that experience, let me just say. So that entire thing was just, I mean, it was fun and it was great. We definitely came up with ways to like trigger a buy or sell like signal, let's say, but it did actually take the trade for you. But with that, and like the special thing about this specific automation was that you can tell it what area you are interested in taking a trade. So let's say you're strictly an OTE trader and you want to take a trade only in this OTE area. You can say I want to take a trade here, and the invalidation of that trade is there. And then within this area, I want one of 3 models to play out, and these models were all mechanically designed, right? And you literally had 3 options you could choose from. So again, in that entire process, although it was fun, it was very strenuous, and I don't know that I would personally be involved in another project like that. Yeah, ditto. Although, like, again, that whole thing made me realize, like, oh, I really do know what I'm trading personally. I do know my model because I had to translate that model. And then also, it does give me ways to think of, like, okay, this is how I want to trade a fair value gap, or this is how I want to trade a swing low. This is what invalidates a fair value gap to me, or invalidates an order block, etc., etc. And all that stuff just, is very thought-provoking and just really gets you thinking about how you're reading price. So I actually find that the people who struggle with trading most, I think software engineers actually pick up trading very, very quickly. All the people that I've met in trading, software engineers seem to pick it up very quick. Coders and developers struggle because they want to know how to program it, really. They want to know how to code it and how to develop it. But the people who struggle by far the most are engineers. And it's because it's because they need to know like everything about how it works, and like it's like it doesn't matter. Like that doesn't matter. What makes you money? so I apologize. So yeah, but yeah, that's how, like, literally of all the people I've worked with in trading so far in just my very short career, that seems to be a very common denominator, and I feel for them, all of them. Yeah, exactly. And I worked with one dude. I was trying to build a backtesting sheet. I actually have this still in play, but I'm trying to build like a not a backtesting, but like a. I'm sure you guys have seen my spreadsheet to track like my payouts and how much I spent with prop firms. So it's basically to track my progress with prop firms, right? And I still have this in play, but the whole point of this sheet is to be able to input all of my prop firm accounts, input you know, whatever I wanted, trades, etc., profit and loss, how many days it lasted, and I want to know the velocity of these prop firm accounts. And this guy, he wanted to know what time I bought the account, what the account numbers were, and like the receipt numbers. And I was like, dude, that doesn't matter. None of that. Like, why? And I got so blown, and I'm such a private person on top of that. So I was like, I'm never gonna share this with you. Like I legit like lost it on him. I was like, this is it. We're not doing this anymore. And that project ended, and I had to work with someone else for this. But but man, okay, yeah. So, bye, Parvays. Have a good weekend. Enjoy your family time. So yeah, and like at some point it's just like you're missing the forest for the tree, dude. Like you have to zoom out. Like this, none of that stuff matters. Oh my gosh, yeah. If only we can just strip away all of our other life experiences and only focus on trading, right? Like only focus on what we know about trading and what we know about charts in real time, as opposed to like, oh, I have mommy and daddy issues. And like I went to school for 4 years for this. And like, oh gosh. Alright, sorry. Back to the model here. So we're still waiting for an inversion to occur. We don't have any bullish or any bearish fair value gaps here. The first one is this. We do finally close it there, and we do get a retap here, so I guess that would be the entry. So in this instance, 1110 is our confluence. 1034 is too close as a target. TMSO is also, so this would actually be more in confluence than against us. I think I know from looking back at the charts that this does not play out, but we'll see what happens here. So a logical target, I don't think there is one. I think we're gonna miss all of it, but I'm gonna aim for New York Open here, which is 100 points. That's a lot. We have a 15-minute wick list. This is also the open of the session. That is also cycle high. That is also above 1R. I'm gonna change the TP to there. I'm gonna also see where 1R lands. Of course, we need 1R on the chart. Okay, so at least 1R there, but I think a logical target would be this 90-minute cycle high. So maybe we can add that as a parameter as well, just like current high or current low. Yeah, on Friday, oh my gosh, Friday was disgusting. Friday I didn't even attempt to trade because it looked to me on a higher time frame basis that both a buy side and a sell side objective was met, and I thought the price action was pretty much done for the week as a result. And you know, like Friday ended up being an inside day. So my two objectives was this mitigation block up here down to this daily order block. Once we reached that, we didn't really do anything. Thursday's price action was inside of Tuesday's price action. Friday's price action was inside of Thursday's price action. So just disgusting. Alright, so we got that retest. Let's see what happens. 1034 holds. We're below TMSO now. Okay, this is gonna get stopped out, obviously. Okay, so in this instance, right, 1034 was above us still, but we were inside of the 1034 candle on entry. Do you guys think that this was an invalidation for the trade, or do you think this was a situation where it added confluence? Because we're inside of this 1034 candle, but we are below the open, which is the actual important price. So we're below the open. So, and it obviously is like right in front of us. So it's like, do we even take this trade or not? Inverse at 11:14. Yeah, we have an inverse here too on 11:15. So I guess when we get that inverse, that should have been a close the trade, is what you're saying? We don't have that as a rule, but I did have that. I mean, I have that as a rule in live trading, but we don't have that a rule. We don't have that as a rule in this model, but we can certainly add that. So basically, close trade. And that did occur during Q3 as well. So that would be valid because that was another Q3 inversion against us. So this would be BE in this case. So this is where we would have entered. This is where the inversion occurred. It literally would have been BE. So if I do watch for the inversion against me, and like let's say I'm in profit on this trade, right? Let's say that obviously here if it occurred, I would have definitely closed the trade immediately. But if I'm in profit and the inversion occurred somewhere up here, what I wait for if I'm in profit is for an immediate invalidation of that inversion. Because sometimes it'll just print and up close, it'll invalidate it, and then again close right, you know, close back up above it, and this is literally just to run stops. Otherwise, if we have an inversion and then we retrace into it and then we respect it, obviously, that is an instance in which I would close for sure. But if I'm not in profit, I automatically close it. But if I'm in profit, I obviously have some room for a pullback because because of inducement, just the concept of inducement. So like here in this instance, for example, obviously this wasn't an inducement here, or it wasn't, sorry, I'm literally saying this, it's the same exact thing. So we have these bearish fair value gaps here, right? Let's say I'm in this short from all the way up here. Once we start to get this kind of, I mean, we have this initial pullback here, right? But now we have this high right there. This would be the inducement high to me. And once we start to close above these fair value gaps here, I'm not closing immediately because I'm already in profit from being up here, and I instead want to see, once we close above all of these and take these high, do we get an immediate invalidation of these inversions, which we do, right? So once we inverse them, we close right back through them almost immediately, right? So here we come above the high, we don't displace above it, and we start closing. We close the first one, and then it closes straight through the second one, and then again it looks like it's going to respect it. So this is what I was talking about. It closes up and then it invalidates it right away, right? So in this case, I actually hold and I withstand that drop, that pullback, to see if it will continue. And it's because of inducements like this where you're thinking that this is a market structure shift to now turn around and go higher, but instead this is just to run out buy stops to continue the trend. But again, in the situation where I'm not even in profit yet and we're still at my entry, then yes, I 100% close when there's an inversion against me. Alright, so I'm gonna count this as, need the quarters in here. I'm gonna count this as a BE trade. Sorry, not a BE trade. This would actually be a full stop because we never made it to 1R. So I'm gonna consider the 1034 candle as confluence, even though we didn't make it to the open, simply because the inversion was confirmed inside of it. I will also say that this is not the cleanest inversion. Oh, wait a second. This inversion happened, that fair value gap was confirmed, was created early Q2, right? But it was confirmed late Q2 here. So then when we get this entry, this is actually on Q3. Yeah, no, I would consider that valid. I would consider that a valid entry. Because I've seen entries occur literally at the open of Q3. So I'm just going to accept this as a loss here and track this as such. So this is an example of like trying to not form fit the data just because it didn't play out. So this is the 15th. Where's the other root candle? Then we have another one print of 11:10 there. Where are the root candles? I accidentally deleted them. There we go. What in the world am I doing? There we go. So it was 11:10 plus 1034 was also, okay, I can only choose one. Let's choose 11:10 because that was below us. Q3 long stop loss was 52.75. Entry was at 11:15. We were stopped out in that inversion, so here 11:19. Alright, so I'm going to add a new condition here in place of PD array because I think that's too ambiguous. It's going to be the 90-minute high or low, cycle high or low. Okay. Alright, going on to Wednesday now. Have a good one, JJH. I actually, I think I'm actually gonna end it at 3 as well. Oh well, we're already on Wednesday. We only have a few more reps, so yeah, I'll finish up this week and I'll call it here. Alright, so we're gonna wait for 9:53 first. I didn't trade Wednesday, so this is purely new price action to me. This is 9:53 right here. Alright, so no fair value gaps in this vicinity, or no bullish or bearish fair value gaps. We have this bullish one here, right at 9:53 is the low. And then we have this one here. Alright, we inverse that one. So we can take a short here with that as our stop loss. 1R is already mapped out with nothing in sight for a target. We can do this low here. That's 2R, not bad. So there are no time levels below us. So we'll just target that swing low. It's too ambiguous for me. We don't have any other time stops in the area. I mean, it's a pretty obvious swing low for sure. It's an hourly swing low. This is an hourly wick. These are hourly wickless candles. All the session lows have also been taken in this at this point. Yeah, this is Wednesday AM session. I didn't trade this day, so this is all like this is all brand new to me. I have no idea what's gonna happen here. Alright, well, we're just gonna have to go with this. So we know that for the model, we wanted at least 1R anyway. So let's just see if we get the re-entry, or if we get the entry at all. No entry there. Okay, we get an entry there, great, and it doesn't invalidate the inversion. So then technically this would be it. Again, that swing low is a bit too ambiguous, although it is an obvious hourly swing low. But I don't think that is a good way to place a target for it to be unanimous across everyone. Alright, so 1R hit there. So we now have our BE at least. Okay, great, and we stop out. Perfect. So then the target was 1R. Good. Gives me a reason to not use ambiguous targets. Alright, let me see here. What is this? What did I do to my chart here? Hold on, guys. Oh no, I'm not gonna have to fix my chart at some point. Let me just do that. There we go. Nope, that's not on there. Q1 is all the way back here. More than one entry per quarter? I think to keep it basic, I don't think so. I don't think we should. I mean, I think it can occur, but I think ideally you would have to be stopped out of the first one first, right? So it's either you get stopped out or you TP. That would be the only instance in which we could allow for a second entry. So in this case, for example, we would be stopped out BE on this candle. So this inversion that's occurring from this small fair value gap here, we don't have an entry for that one yet in this specific instance, like with what we see right now. But I don't see why not, as long as you've already gotten out of the first trade. But for backtesting's sake, we're only going to track the first one. Or I think it's logical to only backtest the first one, because, well, for one, I'm the one actually backtesting this, right? Like, you guys are just watching me, technically. Alright, so this was done. Oh, with the 953 candle, I have to retake that. This was also Q3, indeed. Oh, nice. Okay, yeah. Okay, yeah, that's a good point. Yeah, I think as long as you've logically stopped out, like realistically stopped out of the first one, I think it's definitely a good idea to honestly take the very next entry that occurs. And the reason I say that is because the more we detach from like the outcomes of, you know, this one trade idea has to work, and we're open to taking every single trade idea without any expectations on the charts or on price action in general, that is what gets us closer to like thinking mechanically and taking trades as a business, as opposed to, you know, being attached to the outcome. 958 to 10. Wow, that was a 3-minute trade. This, we got our 1R. Our target was nothing. It was 1R. Add that. Okay. Let's see if midnight was a target. Where is midnight? No, midnight was above us. Darn. Yeah, nothing. Wednesday's midnight was in the area. Monday's midnight. No, that's Tuesday's midnight. Okay, so a previous day's midnight. Alright, let's see if another one occurs here. 950, 956. Yep, and then 1003. Yeah, 100%. I don't know if you were here, JJH, for the when I explained support and resistance, or how I learned support and resistance. But let's just say a quick, like, 3-minute explanation or 1-minute explanation. This is a level, a support and resistance level. And the idea of support and resistance is that first it acts as resistance, then it fails as resistance, and it acts as support, fails as support, acts as resistance, then fails as resistance, and acts as support again. So this is actually like, this is where people lose their money. So that's actually why, for me, I don't take soup trades. I know the entries look amazing, and JD is a god for being able to do this, right? But for me, I'm actually only looking for the quote-unquote meat on the bone before another reversal occurs like that, right? So I'm only interested in this. I'm not interested in this or this. I'm not trying to get in at these extremes. I want the continuation to just have this. And that's like perfectly fine for me. So that's why, like, for inversions, although they are like very good, and I think inversions are the very next best entry after a soup, I prefer, like, after the inversion, like, you definitely want to see the rest of the follow through. You want to see a market structure shift, you want to see a return to the fair value gap, you want to see that fair value gap hold, and then you want to see order flow above that fair value gap, and that's basically your signs of, like, continuation, essentially. So yeah, for me, like, if you know, all of these entries that we kind of practice in Kingline as a server, these are all technically the aggressive entries. But as a result, like, if you're able to capitalize on these aggressive entries, then you can withstand all of these pullbacks early on. You can withstand a pullback in the middle of the range as well, because you literally have the best entry. For me, I just try not to participate in any of the resistance, and I try to only look for the low resistance price action. Oops. Okay, so let's see if we get a retest on here. Yeah, have a go in JJH. No retest. Okay, and then we get another one here. This is too late Q4, so we won't consider that. We'll go to the next day. So that was now Wednesday. So Thursday, I did also trade after the expansion, unfortunately. I actually left early because it ended up dumping. I was actually watching this in live price action before we got on. And I was like, what just happened? What just actually happened? Yeah, that right there. Oops. So we're waiting for 953. There's 953. Darn. Okay, first fair value gap that gets inverse is right there. Let's see if we get a retap. That's literally the only one, so we have to get a retest of that for an entry. Let me place a short here in case we do get it. Time base level below us. We have daily open. All that, and I don't even get the retest. That's literally the only fair value gap. Okay, we do have another inversion that occurs here and there. Okay. In this case, our target would have been 953. We obviously got that retest once we closed above. So let's see if it just makes it all the way to our target or not. 1034 prints. We would have BE there. Just kind of want to see it through now. It's either stop loss or TP. Okay. Well, 1034 would have printed. Let me back up to where we broke even. Alright. So in this case here, was there also TMSO? We actually had this weekly open here. There. No, not there. There. So this would have been the most logical TP out of everything. It did also hit the stat map levels. That's something to keep in mind as we move forward with refinement. But we hit that weekly open levels there for sure. 1-to-1R was tagged. We hit 2R and 3R before that target, or sorry, we hit 2R after the target, 2R and 3R, and then it broke even here technically. But this would have been the logical most time-based target, and that's pretty large for it to be a weekly open and not just, what am I doing here that I keep getting this? This was Thursday. Alright, no confluence here. Alright. 1009, yep, no confluence there. This was Q3. And this was Q4. Long. $23.75, 42.25. Entry was at 10.13, 10.20. Runners hit 1R before the target, but the runners wouldn't have BE because we would have taken a full target actually. Okay. Yeah, I guess when you don't have both, that's the full target. Okay, I think that's good. Alright, next cycle here. So now we are in Q1. 1034 has printed. We need to be early. We need to be at least at 1104 we can seek out an inversion. We don't have any yet except for here. I think we just closed on it for 1975, and the close is for 1950. So we do get the closure there. Now here, if we were to take this entry, it would be there, but this fair value gap is happening in Q1. I wouldn't take that. Personally, would not take that. I could be wrong, but I wouldn't take a fair value gap happening that far back personally. I would want to see something. I mean, this is nice here, right? But I would want to see something. Well, no, that's a pretty clean trade there. Okay. I would really want to see something more recent. I also like this fair value gap because it's occurring within this first fair value gap of 10. Plus we have a market structure shift, a CSD. So this is actually really clean in my opinion. Let's see where the target ends if we were to take this. So the stop loss would be 50 points. So weekly open is out of the question. 1034 is out of the question. The next one would be 953. That's just over 1 R. Let's see if this works out. 90-minute cycle high is also there. Let's see if that's 1 R. It's less than 1 R. Okay, 953 it is. I could be wrong here. This is pretty clean though. This is like you've ran out, you've created internal liquidity, you ran that out 1, 2, 3 times. Failed to get to the low. You've displaced up. This is like really energetic here. So this is clean. This is a 1 minute unicorn that I would want to see all day. So we did get that retap once we closed above here. Oh wait, we didn't actually. We just got that close. Let's see if we get the retap. Because it was this candle, right? Close. Yep. So we need a retest on the very next candle. Boom, we got our entry. I'm actually going to be pretty blown if this plays out. Because I got off early this day. Okay, we're above 1034. We didn't hit 1 R yet, so we can't break even yet. Alright, 1 R there. So now our runners are BE. Okay. Boom. Damn it. I got off at 1040, 1045. So in this area here. Isn't that some shit? That is so tough. Okay. Let me track this. Darn. Darn. Alright, this is still in question for me. This is the part that I find ambiguous about the Q3 reversals or the inverse fair value gaps in general. Is that I actually want a more distinct time of when that fair value gap is forming and when it's being confirmed as an inversion. This is too, because then it's like you can look back at literally any fair value gap within this 90-minute cycle, and that I just find that too ambiguous personally. But obviously this was a very clean play. So this is, I'm gonna document this as a inversion that's happening during Q1 for the notes. Ote, so we have 17th, Thursday. The root candles here were 11:10 right there. This happened, well, it was confirmed during Q2. Yes, Q2, and the entry happened during Q2. Long stop loss 50.75, TP 76.75. Oops, how did that happen? Entry was at 11:10. Our exit was at 11:58. Target was 953, and we took a full TP on that. I feel like I should add a full TP. I'm just gonna leave it, because if it didn't take, if both of these are blank, it's an assumed full TP. No, I'm just gonna add it. Full TP. Or I'm just gonna put TP, sorry. Do I already have a TP? Yeah, I do have a TP. Okay. So that would have been this one. This one and this one. Alright, and my note for this was created during Q1. Alright, 2 more reps and then we are calling it a session. Any comments or concerns currently? Oh, this was the day I was watching it. And it literally dropped at the beginning. So it wasn't Thursday. Alright, we need 953. Alright, there's 953. So we get the inversion here. That's really interesting. It closes, it confirms at 954. We do get that re-entry there, we get that retest there. So we do have our entry. Stop loss at the low. Our target here is easily TMSO. It's basically about to hit 1R already. I'm gonna remove this wick list indicator. There's too many glitches with that 4-hour wick list. Alright, we don't hit 1R. Oh, there we go. We hit 1R. We were so close to hitting our entry, although we wouldn't have been BE. So we're BE now. Oh my goodness. Wow, that is messy. That would have been scary in this trade in real time. Alright, great. So that was nice. That was really, really clean, actually, aside from this whiplashing back and forth. Alright, this is the entire quarter. So see, like, in our first few reps, it was dicey because we were still trying to decide, you know, what our parameters are. But now that we have those parameters figured out, we're pretty much breezing through the reps, right? And that's exactly what I mean by, like, you kind of figure these things out through your preliminary testing, is what's realistic for the trade or what's realistic for your parameters versus not. And you start to have very early refinements. So this is at the point where you have established a model, right? Once we have X amount of data, then we start to establish, okay, well, now we know our runners are breaking even this many times. So then maybe we can reduce our TP or even reduce our stop loss at this point so that we can start to break even more. And reduce our losses, and then we almost eradicate our losses altogether, and we can almost maximize on our returns or our profits, and we can do that through either, you know, more targeting, bigger position sizing, etc. So this is 21 for 30. Entry was at 9:55, 10:07. 10:07, which I thought I already added. Excuse me. Okay. So that is 13. We had a full TP. Yes. Runners did not BE. Our target was TMSO. Alright, one more rep. If we get it. Alright, so going into our next cycle now. We want 1034 to print. There it is. Then we need to get to 1104 for it to be late Q2. There it is. So now we can wait for an inversion to occur. Now see, this is tricky again because we have, oh no we don't, I thought we did. Okay, good, it's no longer tricky. We have this inversion before, oh yeah, okay, we have this inversion beforehand, and it has confluence with 953. This is now, we are now available to take an entry. I'm just gonna do this mechanically. Let's say that this is an entry here. I'm not gonna think about it too much. Since I considered that fair value gap from Q1, I'll go ahead and say that this is valid. Our stop loss would be there. This is late Q2 now. Let me just confirm this is the last 11 minutes. So Q3, yep. And our target in this case can be 90-minute cycle high. We also have AM session high there. We'll just go with this. 90-minute cycle high, that is more than 1-to-1. And TMSO is below us as also confluence. Okay. Not bad. Where's 1034? We're on 1034. Okay, let's just see. Holds. Here's 1110. Ooh, did we tap it? I think we did tap it. Okay, so we've taken profits off the table now, and we're now BE. We tapped 1R. Full TP. Beautiful. This is not a bad model, guys. Okay, Q1. Our entry was at 11:05. Okay, NQ 18. Friday. Our confluence here was both 953. Well, it was really 953 because 1034 was above us. Could we not enter at 11:01? No, we couldn't enter at 11:01 because our rule set has it that we have to enter as late as early late Q2. So the first 11 minutes of Q2 are null and void. So we just wait. And 11:01, we didn't close over it yet. We didn't close above it until 11:01. We closed above it, so 11:02 would have been the earliest. It's still the same entry though, right? Because no matter what, this is the high of the inversion. So all you have to do is wait 2 minutes for the same exact price. Does that make sense? But yeah, the rule set that we made earlier was that we're only allowing entries as early as late Q2. And that's because Q2 can act as the manipulation, so late Q2 is at least closer to Q3. Just like we allow for entries as early as or as late as early Q4, which would be how we're quantifying that is the first 11 minutes versus the last 11 minutes. Okay, I think I copied that already. Alright, 9:53. This happened during Q2. So see how we put it here. In late Q2, last 11 minutes, early Q4, first 11 minutes. Q2, we went long. Our stop loss was 22.75 for 32. Nice. Okay. 18 minutes. That was a full TP. Our runners never hit BE. Target was 90-minute cycle high. Yes. Alright guys, so to recap this model so far, we're currently working with just 1 week. We currently are working with a 62% win rate of full TP. So technically these also should be considered within the win rate because we at least got 1R. We would have been BE on those. But full profitability, this will be the discretion between that. So 62% hit full TP, 12.5 loss. The percentage between those two is what we were able to take partials on, but we wouldn't BE on. But basically, again, a recap of the model so far, we're looking for an inverse fair value gap happening from late Q2 to early Q4 after the 9:53 and 10:34 root candles print. We're using the root candles to add confluence to the entry or as a target. Stop loss is going to be at the swing high or swing low. We're BE at 1R, and we take partials if possible. This is going to assume that everyone is entering with multiple contracts and not just one. We are going to TP at a root candle, TMSO, or LRLR. I think I'm going to change LRLR because that's too ambiguous to, I'm actually going to change all of this. At a root candle or any other time-based level. So, you know, I'll put in here TMSO, New York Open, True Day Open, which is midnight. We'll do weekly open. What else is there? That's basically, you know, as I'll just put etc. Or 90-minute cycle high and low. And this needs to be a backslash high low. Okay. And then the rules to not, what are you saving links for as chart examples? Your Maya, it's like this is your first day, so you click on the link and it saves the chart. So that's the chart example, it's the link to the actual chart of the trade. So you in in TradingView, you click the picture, oh wait, how do you save that on your TV? What do you mean? Oh yeah, okay, so you click the camera and you copy the link. So copying the image, for example, when I'm trading with you guys, when I'm calling price live and I'm telling you I'm entering here, I copy image and then I literally copy paste to the chat, which is this is how I save all my journal entries, right? And then, you know, for the data part, I just copy the link instead, and it's literally the same exact chart. That is hilarious, dude. Oh my goodness. Alright, so alright, so the rule so far is no trade if TMSO is closer than target, and we're going to close the trade if an opposing inverse fair value gap occurs against this. I also think that if the inverse fair value gap, what the rule should be is the inverse fair value gap should occur before 1R. After 1R, we've already taken profits off the table, so the rest would BE anyway, or you can obviously opt to just close it, but I think that is logical if that inverse really occurs against us before 1R. But we'll just see how the rest of the reps play out. But so far, so good. I think this model is very viable, and it's given us, like, you know, the first 10 reps after those first 2 rocky reps that we went through. The rest of the 10 reps were literally a breeze. Okay, so this link I'm going to share in my channel. Q3 root candles. I think we should come up with another name. But yeah, I think we should come up with another name, but I'm gonna leave it as is for now. I'm going to publish this with no duplicate as template. None. Okay. And I'll share this in my channel. I'll share this with you guys here. No, never. So I have a saying, you're Maya. There's no such thing as dumb questions, only dumb people. Just kidding. Alright, so yeah, I'll share that there, and we will resume this testing next week. Thank you guys for everyone that tuned in, and I'll see you guys next Saturday. If you want to backtest this on your own, you can actually edit this actual sheet, so if you want to add your own reps, feel free to. If you want to be able to test this on your own, just ask me and I'll send you a copy of it so that you can make your own duplicate instead of duplicating this one. Cool. Cheers, guys. Sure, go ahead. One more. totally open. Oh no, go ahead. You can. I'm actually gonna clean up the sheet anyway, so I might as well just keep you on here while I'm doing that. Okay, so what I do is I take it 20 reps at a time. That's a good question. So for the recording, the question was, what do we do after this? When do we consider this a mature model? Is it number of data points or number of backtests? So what I personally aim for is at least 60 data points. So 60 data points would be 3 months of data, right? In this case, because there's 2 points per day, 60 data points would actually just be 1 month. So what I'm looking for is at least a full quarter of data, and a full quarter, preferably the most recent quarter of data, right? Once I have enough data, and this is all gonna be preference really, but I would consider how many data points do you want before you consider risking your own money on it. And that's what I like to go off of. For me, again, I at least want to see 1 quarter of most recent data. Once we have 60 data points or 60 days, 60 trading days, which in our scenario here would be 120 data points. Once we have that, then I'm checking to see what our win rate is. Every 20 data points or every 20 trading days, I'm looking at the current data, right? We can organize it by root candles, we can organize it by times of day that we're taking, or we can organize it by full stop and full TP, and we can then say, okay, these trades we're losing, and what do these trades have in common for the trades that took full stops? Can we eliminate one of these things that is causing us to take a full stop? We can go back and look at those charts. We can look at the data, maybe even the times that those trades were taken. Maybe they have a common denominator, right? And then if they have, or like even our BE trades, right? What do they have in common that we can essentially eliminate? Then it's like, okay, if it's happening in this time window, we can eliminate taking trades within that time window. For example, early or late Q2. And then once we've done those refinements, I like to do these refinements every 20 trading days. So once we have 40 reps, 80 reps, 120 reps, I would go back and look at those, or would go back through the data and see if there's anything that we can refine. For my first preliminary test on the previous version of the Q3 inversion that we tested, the very first refinement that I did after the first 20 reps was this one here. No trade if TMSO is closer than the target. Okay, so once we get our first 40 reps in this thing, we'll go through the refinement together, and we'll look through the data and we'll say, okay, it looks like this happens to be a common denominator. We'll remove that from the criteria or make that as a rule as to not take that trade. So once all this is said and done, every 20 trading days we've done a refinement. We already have a full quarter of testing. For me personally, I'm looking for a 60% win rate or better. If it's at 60%, I'm not looking to refine that more. If it's better than 60%, I've I'm ready to trade that live and to track that data live. So I will then start, forward testing, essentially taking it in demo, taking it live trades, and then tracking that data moving forward. Does that answer your question? Sweet. All right, guys. Again, we will resume this testing from every weekend forward. My pleasure. And yeah, hopefully this recording isn't crazy long. I think it is the entire 3 hours here. But yeah, if you guys want to go back and see any part of this will be shared in my channel as well. Again, thank you for tuning in, and see you guys next weekend, or see you guys this week for the live sessions. Cheers. My pleasure, my pleasure.